Hey, what's up, everyone? Welcome back to my world of stocks, and welcome back to my three stocks on sale series for the month of November 2025. Where in each episode, I give you three new stocks that I feel look very attractive at today's prices for the long term. However, normally I would try to give you guys some variety in terms of risk, one low, one medium, one high, maybe a combination of value growth, maybe some dividends, different businesses, stuff like that. But right now, I just cannot ignore what is so glaringly staring at me in the face, and that is that REIT stocks are being so incredibly undervalued by the market right now, mostly over high interest rates, despite the fact that the Fed just lowered them for the second time this year to the lowest level in 3 years, which don't get me wrong, they are still high and could even remain high depending on macro conditions in the coming months. But the fact that they are being lowered at all and are probably going to be lowered further in the coming years, I just think it's a headwind that will gradually turn into a tailwind for especially the strongest REITs out there, of which I'm buying three in particular that I feel have some of the strongest businesses around and should not be trading anywhere close to the low prices that they're at today, with also their mouth-watering dividends. So that's what we're doing today, a special REITs episode of three stocks on sale. These are my absolute favorite at the moment, and I can't wait to share them with you. So let's just go ahead and dive straight into them. Now, the first of those will be Vici Properties, ticker symbol VICI. I know I talk about them a lot, but in my opinion, this one probably has the strongest business of the bunch given the insanely lucrative properties that they own across casinos, resorts, and entertainment, all of which, by the way, have nothing to do really with the retail apocalypse that has been weighing on the real estate sector at large, nor does it have much to do with the rise in remote work either, which continues to hammer office buildings and the like. Instead, Vici's consist of giant and highly profitable cash cows like MGM Grand, Mandalay Bay, Caesar's Palace, and more. These properties have been so incredibly resilient that they've been collecting 100% of their rent every single year, even during the absolute worst times like the 2020 pandemic. Yet the stock has been strongly suppressed for years given the high interest rate environment. But why did we even get high interest rates in the first place? Of course, it was a reaction to our insanely high inflation coming off the pandemic. Well, here's the crazy part. Many of Vici's contracts are actually linked directly to CPI, the Consumer Price Index, meaning that as inflation rises, so too does their rents. These are highly valued contracts for Vici, for which they're also actively working to grow up to 90% of their total contracts count by 2035. And of them, most of them are also under long term triple net leases, meaning that the tenants are actually the ones responsible for handling most of the operating expenses. In other words, you have an insanely strong business here that can absolutely thrive under both a high inflation environment or a lowering rate environment where borrowing costs become cheaper, allowing REITs to expand and grow. Plus, the contracts are virtually unbreakable given the massive size of these casinos and resorts, who also have to comply with huge gambling regulations, meaning they can't just up and leave Vici for another competitor. And yet, again, despite this being probably my overall favorite REIT business in the entire market, the stock is so heavily suppressed right now that their price to funds from operations is actually cheaper than the sector by a whopping 17%. And the dividend has also risen now to one of its highest levels ever at above 6% too. I'm sorry, but if that's not a screaming buy, I don't really know what is. And I plan to keep loading the boat on this one while I still can. Price below 30, dividend above 6%. That's an automatic buy for me at those levels. Another stock, though, that I think is an automatic buy right now is my next favorite REIT in the market, and that is Extra Space Storage, ticker symbol EXR. Both are honestly great choices in my opinion. I usually go back and forth on which I like more because, like Vici, EXR also has a very attractive business. I do like Vici's a little more at the moment, but the self-storage market is no joke either. It's one that I really don't ever see going away, and even being possibly disrupted by any of the new developments in real estate. In fact, I actually think EXR could benefit from some of them. For example, when organizations downsize their office buildings and close some of their retail stores, they usually store much of that away, at least temporarily. And if the economy weakens, many people even downsize their homes or move in with roommates where they often have to utilize self storage units, unfortunately, of course. Regardless, though, the facts don't lie, which we can see plainly here that the demand for storage units only ever grows every single year, which is not something that you can say for all parts of real estate. And in fact, it's been such a lucrative market that storage REITs themselves have actually been the second best performing REITs of all, only behind data centers because of the enormous rise in AI. Yet, like Vici, EXR has been dragged down in price for the past couple of years, which was only made worse this past week, by the way, on earnings that disappointed the market, despite the fact that I actually thought they were pretty good. In fact, funds from operations, the most important metric for profitability, actually beat estimates, with revenues also rising year over year. Unfortunately, though, those sales slightly missed analyst expectations, while operating and interest related expenses rose about 5% each, which seemed to spook investors. That rise in expenses, though, was driven primarily by inflation and high interest rates, which have nothing to do with the underlying business of EXR. And as interest rates eventually do come down, that too should later turn into a tailwind for them. Plus, the company even raised their full year guidance for profits. They spent $244 million to acquire 24 new properties across several states, which management feels have stronger performance metrics and will thus boost their portfolio. They added 95 more stores to their growing third party management platform. They even increased their store occupancy rates up to nearly 94%, which is incredibly strong. Yet the stock actually fell by double digits this past week, leaving it now down over 40% from the very top, while the dividend has risen to one of its highest levels ever, that is quickly approaching a 5% yield. For me, that's going to be more than a big enough dip for such a strong leader like this in a resilient market where they not only command the most share, but they also generate more revenue growth, more funds from operations, and even have a stronger balance sheet than their peers too. What's not to like about it? All right, guys, that's going to leave us now, though, with the third and final pick, which, to be honest, this one is probably the riskiest of the bunch business wise. But I'll explain why I think that the trade offs are actually worth it for me. And that stock is Federal Realty, ticker symbol FRT, who, unlike Vici and EXR, Federal's business is actually exposed to some of those disruptive trends that we talked about, as a majority of their properties are in fact in retail, as well as even some mixed use properties like office and apartment buildings too. However, the reason why I still consider FRT worth it is because the company has actually done a great job of only handpicking the highest quality tenants available that are also located in prime locations across the country where they're much less likely to be damaged by changing market dynamics. In fact, they prioritize quality over quantity by so much that despite being in business for over 6 decades, their portfolio consists of only around 100 different properties. Again, making sure that they're located in only the best high traffic areas with large population densities and high average incomes. The results being that even during the 2020 pandemic, smack dab in the middle of the retail apocalypse, when most REITs were getting absolutely crushed, FRT was actually able to go out there and acquire new properties to ensure future growth. And although the pandemic was still a difficult time for them, their sales have at least been growing every year since, with funds from operations outperforming their closest peers too, even during economic downturns. For example, during the '08 financial crisis, FRT put up many times greater performance than their peer average, which, as you can see on this chart, it wasn't even close. Yet, like EXR, the stock has also taken a big hit, losing close to half of its entire value from the top, despite this being historically one of the best, most popular, best performing REITs in the market, which, with the dividend now being raised to one of the highest levels ever, I think most investors would have killed for an opportunity like this in the past. In fact, the only other 2 times that I know of where the yield was higher was during the Great Recession and the 2020 pandemic, 2 extraordinarily rare events. And by the way, I haven't even mentioned the best part of all, that FRT is actually the only REIT in the entire market that is also a dividend king, meaning they've not only paid a dividend, but they've actually grown it every single year consecutively for over 5 decades in a row. And that alone makes me want to buy more of this stock. With that, incredible of a track record, I do feel pretty strongly that it will recover once rates do come down more significantly. Time will tell though, and of course, as always, you have to do your own research and make your own decisions. But these are just my thoughts, guys, and my personal opinions on these. A few stocks that I'm buying myself right now. If you appreciate my videos though, or they ever help you out in any way, please consider subscribing, hitting that like button, or even supporting me on Patreon. Link is in the description, where you not only get early commercial free access to my videos, but you also get membership to our community Discord, where I post a new stock purchase every single day for our community portfolio. It's a ton of fun, and I'd love to see you hang out there with me and other like-minded investors. But either way, I just thank you for watching my videos. I really appreciate all of your support. It means the world to me, and I hope you're all doing well, my friends. And I will catch you in the next one. All right, take care, everybody. Bye-bye.